Well, let's head to South Africa now, where global ratings agency Fitch reaffirmed the country's rating at BB+ on Thursday. But many are expecting less relief when Moody's and S&P deliver their reviews. The possibility of a downgrade is weighing on the market there. It was also factored in as a risk when the Reserve Bank met to deliberate on rates this week. Well, CGTN Sumitra Nydoo tells us more.
As expected, the Reserve Bank was cautious. Despite room for a cut, the bank decided to keep the repo rate unchanged at 6.75%.
Domestic economic growth outlook remains subdued but positive. Both consumer and business confidence remain low and are also likely to be affected by political developments in December. The forecast for GDP growth generated by the QPM has been revised up marginally to 0.7% for 2017, but revised down to 1.2% and 1.5% for 2018 and 2019 from 1.3% and 1.7% previously.
While inflation remains in check for now, the governor noted a number of risks that could alter projections. Rising oil prices and possible rating downgrades will be negative for the economy.
Normally we have that scenario: low growth, low employment, high unemployment, and low inflation rates. You can loosen monetary policy to a certain extent and allow the economy to grow a bit faster. But as the governor did indicate here, we have a lot of uncertainty in the economy at the moment.
The elevated oil price, which is starting to put upward pressure on petrol. We've also got the ratings outcomes. We've also had the ANC elective conference outcome that is still to be anticipated. And then, of course, the budget review that's due in February, and how we're going to address the revenue shortfalls.
The focus now is on the ANC leadership race and how it will impact the rand.
If he needs to basically intervene in the economy going forward, he has some ability. Also, if he had basically dropped rates, he may have to raise them just to maybe support the currency if things go against us.
Now, what we have in our favor at the moment is that a lot of the policies that will need to be implemented to raise taxes and cut expenditure will only be identified at the ANC elective conference.
The December conference is just weeks away. The currency is expected to remain volatile in the run-up to the gathering. There's no telling where it will go once a new leader is announced. Sumitra Nydoo, CGTN, Johannesburg, South Africa.
Well, Sumitra Nydoo now joins us with more insights into this from Johannesburg. Sumitra, welcome to the show. Now, as we heard there, Fitch did point to potential fiscal consolidation measures after that ANC elective conference we expect in December. That's one of the main reasons they kept that rating unchanged. So could we see a similar wait-and-see approach from S&P and certainly Moody's?
Well, Uche, it is likely they could do the same given the significance of this conference. President Jacob Zuma steps down and the economy has struggled during his time in office. Unemployment has risen, poverty too has risen. There's also been corruption and state capture issues. He will remain president of the state, but with a new leader in place at the helm of the ANC, means for a lot of people there will be a number of policy changes. And this is where the wait-and-see approach can be applied. Now, the agencies could make proper decisions after this once they know more about the economic policies, the plans effectively of how whoever that leader is going to get the economy back on track, reduce the deficits and shore up debt. However, having said that, the agencies do follow a bit of a system. Moody's usually moves its outlook from negative to negative watch, while S&P and Fitch lower theirs from stable to negative before downgrade. So Fitch moved to a stable yesterday. Moody's and S&P are both on negative, so between the two there could be a cut coming, and it's S&P that's widely expected to be the one to cut the rating, but I suppose it's anyone's guess right now.
And Sumitra, some analysts have raised quite a good questions. What really is going to change after December, given the fact that we've seen the budget it has revealed that debt dynamics aren't going to change that much? We're still going to see a big rise in borrowing, for example. So help me answer that question. What could change after December?
Well, I think the leadership change is going to be key, and then policy changes. It's now down to who will take over and what they will bring to the table. In terms of the race, there is a concern that some candidates could continue as Zuma did for all of these years. The economy is already very weak. We still have a number of structural problems, the lack of implementation of projects that could lift the economy. Now, analysts are saying there needs to be a complete overhaul with the next leader. Things will have to be done differently, and only the right leader and the political will can make that a reality. Now, South Africa is very well developed. It has good infrastructure. Tourism is growing. There's a whole list of areas that used to work really well and can work again. So it's also going to be key for foreign investments. New leadership will also determine whether investor confidence can be restored to where it once was.
And on that note, how have we seen, Sumitra, the markets pricing this in, given some reports from bond investors that they believe the country deserves to be treated as junk, and we're seeing them price that into the bond market now, in light, of course, the growing deficit and suddenly slowing growth in the country.
Yes, very interestingly, you know, there's a bit of a disconnect between the economy and the market at the moment. Not unusual, though, but it's because over 70% of the JSE is made up of foreign companies. So we've seen some fantastic gains on the JSE this year. The market is currently at record highs, largely because of positive sentiment and better prospects for global growth that's feeding into these stocks with all or some international exposure. Yes, on the bond market, there is an issue there. You know, it's still strong, but we are seeing it in the costs because that risk is being priced in. Investors convinced that South Africa will be downgraded, and we are seeing it there. And it has been factored in for a while now. In fact, many were surprised when South Africa wasn't downgraded further in June. There was an expectation, almost certainty, that with all the events unfolding in the country, there would have been a further downgrade, but there wasn't. So it could go either way. There has been some capital outflows, but the bond market does remain strong, and we've seen, considering with that risk, and we've also started seeing investors waiting on the sideline, more optimistic that there will be some good changes in December. Uche?
Well, many thanks, Sumitra, for those insights. Sumitra Nydoo joining us there in Johannesburg.